Here are the crypto top headlines covered in this video. More U.S. senators back Elizabeth Warren's AML bill targeting crypto. Next, Google to loosen restrictions on crypto ads will allow promotion of cryptocurrency coin trusts. Also, where pension funds stand today on crypto investments. Plus, Japan's SBI looks to Saudi Aramco as it continues Middle East expansion. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, more U.S. senators back Elizabeth Warren's AML bill targeting crypto. The legislation reintroduced in July already has the support of several U.S. lawmakers, but critics have suggested it could threaten financial freedom and privacy. Massachusetts Senator Elizabeth Warren, an outspoken critic of digital assets in the United States government, has announced that 5 more senators have agreed to co-sponsor one of her bills aimed at cracking down on money laundering. In a December 11th announcement, Senator Warren said Senators Raphael Warnock, LaFonza Butler, Chris Van Hollen, John Hickenlooper, and Ben Ray Lujan had backed her Digital Asset Anti-Money Laundering Act reintroduced in July. According to Warren, the legislation specifically targeted illicit uses of crypto assets for money laundering and financing terrorism. I'm glad that 5 new senators are joining the fight to take action, including 3 members of the Banking Committee, said Warren. Our bipartisan bill is the toughest proposal on the table, cracking down on crypto's illicit use and giving regulators more tools in their toolbox. The bill already had bipartisan support from several senators and organizations, including the Bank Policy Institute, Massachusetts Bankers Association, Transparency International, U.S., Global Financial Integrity, National District Attorneys Association, Major County Sheriffs of America, the National Consumer Law Center, and the National Consumers League. In the announcement, Warren reiterated a claim she made in a December 6th hearing of the Senate Banking Committee and subsequent interviews that roughly half of North Korea's missile program was funded by digital assets. Critics of the bill have suggested that lawmakers focus on bad actors utilizing the technology rather than digital assets and their underlying infrastructure. Steve Wiesman, a cybersecurity expert, backed the legislation in a November Senate hearing, calling it a no-brainer to address money laundering concerns. Our next top headline, Google to loosen restrictions on crypto ads will allow promotion of cryptocurrency coin trusts. Google has announced it's updating its policy on allowing advertisements related to cryptocurrencies worldwide. According to a new update from the company, the search giant will update its policy on crypto in January 2024 to address the advertising rules for what it calls cryptocurrency coin trusts. According to the announcement, U.S. advertisers will be able to promote cryptocurrency coin trusts through Google Ads if they meet the criteria and receive Google certification. According to Google, cryptocurrency coin trusts are investment vehicles that allow investors to trade shares in trusts that hold various digital currencies. Google says the update emphasizes its commitment to complying with local laws and to align with the expected approval of spot Bitcoin exchange-traded funds. The policy will make allowances in advertising for businesses indirectly involved in cryptocurrencies, such as those that accept cryptocurrency payments, produce crypto mining gear, or offer Web3 and blockchain educational materials. However, strict regulations will still apply to non-fungible tokens, or NFT, gaming, and other specific crypto products based on what the products are offering. Advertisements for hardware wallets and other crypto-related services will be allowed and subject to certain conditions. The policy also explicitly prohibits ads for initial coin offerings, or ICOs, decentralized finance, or DeFi services, and the purchase, sale, or trade of specific cryptos. Our next top headline: where pension funds stand today on crypto investments. As pension plans still try to classify crypto token exposure, such funds could target infrastructure plays in the space, crypto investment firm exec says. As one pension fund reveals a new crypto-related investment, others may soon follow, though allocations are likely to follow ample due diligence and could be limited to certain categories, industry participants say. The investment arm of London-based M&G plc invested $20 million in Global Futures and Options Holdings, or GFO-X, the company said Sunday. GFO-X is the UK's first centrally cleared crypto derivatives trading platform venue regulated by the Financial Conduct Authority, it noted. M&G plc, with roughly $5 million investment, insurance policy holders and pension customers, made the allocation on behalf of the Prudential With Profits Fund. The company managed €332 billion, or $357 billion, in assets as of June 30th. The investment comes after pension funds, including the retirement plans of U.S. aerospace and defense firm Lockheed Martin, were reportedly backing crypto broker Hidden Road. A CFA Institute survey in April 2022 found that 94% of state and government pension plan sponsors reported investing in crypto. The report, which did not specify the type of crypto-related investments respondents were allocating to, also found 62% of corporate defined benefit plans were putting capital toward the sector. But particularly after the collapses of several large industry players, pension funds must carefully assess the risk and rewards of investing in crypto assets, according to C.K. Zhang, co-founder of crypto hedge fund ZX Squared Capital. Given the nature of their prudent investor bases, most of them have little or no exposure to cryptos due to the market volatility, regulatory, and reputational concerns, he told Blockworks. Such caution comes as several pension funds got caught up in the bankruptcies of Celsius and FTX over the last 2 years. Canadian pension fund manager Caisse de dépôt et placement du Québec, or CDPQ, had invested $150 million into Celsius in October 2021, less than a year before the crypto lender filed for bankruptcy the following July. The Ontario Teachers Pension Plan Board said in November 2022 that the fund it was overseeing had invested $95 million in Bahamas-based FTX and the exchange's U.S. subsidiary through its venture arm, Teachers Venture Growth, or TVG. In the wake of such crypto entity failures, pension funds are likely to continue requiring more due diligence before investing in the space, Zhang said. He added, however, that such funds are likely to be attracted to the segment. As Bitcoin has the highest Sharpe ratio risk-adjusted returns among all the major asset classes through the last decade, pension funds definitely want to have certain allocation to crypto as a way of diversification, Zhang argued. We expect a lot more pension fund investments after the BlackRock and Fidelity Spot Bitcoin ETFs get approved by the SEC early next year. While BlackRock and Fidelity are the largest financial players seeking to launch a spot Bitcoin ETF, they represent just 2 of more than a dozen issuers vying to bring such a product to market. The U.S. Securities and Exchange Commission is set to rule on a proposed Bitcoin ETF by ARK Invest in 21 shares by January 10th, a date by which some industry watchers expect the regulator to also decide the fate of other similar applications. The SEC has never approved ETFs that have directly invested in BTC and could choose to again deny them. Dan Hoover, Chief Operating Officer at Castle Funds, said conservative pension plans could also, for the time being, focus on infrastructure plays in the crypto space. These could include putting capital into derivatives markets, clearing organizations, or other capital-intensive parts of the trading value chain, he noted. Such investments are more likely to be made through funds than directly, he added, a trend Hoover said was common during the last wave of institutional crypto investment. Regarding direct investment into tokens, I think that pension funds are still trying to classify the exposure, he said. It's not a traditional asset class, so it doesn't fit well into their asset allocation models and policies. M&G cited an evolving and maturing regulatory landscape for digital currency assets in its Sunday investment announcement. Such crypto regulatory clarity has lagged in the U.S. The U.S. Department of Labor has warned plan fiduciaries to exercise extreme care before considering adding a cryptocurrency option to a 401k plan's investment menu, Hoover noted. He added, at least in the U.S., the guidance from the Department of Labor regarding crypto options in 401k plans makes it clear that plan sponsors face significant skepticism from their primary regulator. Our next top headline, Japan's SBI looks to Saudi Aramco as it continues Middle East expansion. They have signed a memorandum of understanding on digital asset investment and semiconductor production. Japanese financial services firm SBI Holdings and Saudi Arabian state-owned oil company Saudi Aramco are considering teaming up on a digital asset investment and semiconductor production projects. The two signed a memorandum of understanding on cooperation that includes the establishment of SBI Middle East in Riyadh as a base for operations in the region. According to the Memorandum of Understanding, signed December 7th, SBI and Saudi Aramco will consider collaborating in the field of digital assets and co-investing in their digital asset portfolios. They may identify Japanese digital asset startups that could be interested in expanding to Saudi Arabia and launch semiconductor production projects in both countries. In addition, the scope of the alliance may be expanded upon agreement between the company and Aramco. Saudi Aramco is the world's second largest corporation by revenue after Walmart. The Memorandum of Understanding mentioned Saudi Aramco investments aimed at complementing its supply chain. Cryptocurrency is not recognized by legal entities in Saudi Arabia, although the government has shown a healthy interest in Web3. SBI Holdings' partnership with Taiwan-based Power Chip Semiconductor Manufacturing was also highlighted. This is the latest step SBI Holdings has taken to establish a presence in the Middle East. In November, it entered into a joint venture with the British bank Standard Chartered's fintech investment arm, SC Ventures, to create an investment company in the United Arab Emirates, or UAE, to invest in market infrastructure, risk management and compliance tools, DeFi, tokenization, consumer payments, and the Metaverse. In September, SBI Holdings and UAE-based Trade Finex partnered on a joint venture based in Japan to localize TradeFinex's XDC network enterprise blockchain there. SBI Holdings is Ripple's largest outside shareholder and has been its partner since 2018. In late November, SBI Holdings announced a memorandum of understanding with Circle that would boost USD Coin, or USDC, circulation and Web3 services in Japan, subject to regulatory approval. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.